From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB this Friday, the first week of President Trump back in office. It was a positive session on the market. We've certainly been talking a lot about the Trump bump, and the S&P 500 had another record high overnight. Our market out of the gates very strong and rising by around 0.5%, and a lot of the gains today coming through from the retail space. I'll get to that in a moment, but consumer discretionary up over 1%, REITs were up by about 1.2%, and nearly every sector higher apart from energy and materials, which were of course reacting to the president. Let's get to the themes of the day, because the Bank of Japan has taken a hike. It has hiked interest rates to their highest level since 2008, taking its rates to 0.5% from 0.25%, as widely expected. Of course, the focus now is what is the path forward from the BOJ, and a lot of questions will be asked from Governor Ueda in the press conference coming through. Speaking of talking to the press, Donald Trump again talking tough. He was actually talking to leaders as well, business leaders and of course world leaders at the World Economic Forum in Davos. He really did indicate that he wants interest rates globally to come down. He wants crude oil prices to come down, putting pressure on OPEC and Saudi Arabia to lower crude prices. Had a great chat with this about this with Mark Todd from Bank of China earlier. You can find that online at ausbiz.com.au. He said, look, this isn't The Sopranos. You don't just talk tough like this and expect that global leaders or institutions like OPEC are going to just do what you say. And of course, the retail reward, we had quite a lot of the consumer discretionary stocks powering ahead today. We've had the Myer and Premier Investments shareholders approve Myer's merger of Premier's brand apparel's business. We also had an upgrade on Wesfarmers. To the downside, though, was Kogan. Having a look at some of those shares, Wesfarmers up 3.5%. Harvey Norman also doing well. At one point, it was up by about 3%. And Premier Investments, which has been lower all week, actually snapping back today as investors buy in, perhaps hoping to get a piece of that pie when Myer takes over those shares. To the energy side, of course, pressure on crude oil following Trump's comments. Woodside Energy down 2%, Santos off by 0.4%. And looking at the miners as well, which were weaker as a sector, but the big players there all moving higher. Fortescue up by 1.3%, $18.81. A quick look at the corporate stories. Insignia Financial shares, they earlier jumped the most in over 3 years, with Citi flagging cost savings for the 178-year-old money manager. They also spiked yesterday, of course, following that matched $1.94 billion takeover offer from Bain Capital. Myer shares higher for a fourth straight session. Premier Investments, meanwhile, snapped a 4-session losing streak after shareholders of both retailers approved Myer's merger with Premier's apparel brands business. Kogan shares, though, cratering. Citi saying its latest earnings update missed consensus by 7%. And we touched on Wesfarmers positive on a broker upgrade from Goldman Sachs. They've upgraded the shares of the Bunnings owner to a buy with an improved price target of $78.70, which implies a near 9% upside. Let's welcome to the COB Shane Oliver from AMP. Good to see you as always, Shane. Well, he is back. Your takeaways from the first week of President Trump 2.0.
Well, it's certainly been an interesting week. I think the first thing to note is that there hasn't really been any big negative surprises. And I think that explains why share markets have been able to rally. It's also worth noting that ultimately, if Trump is going to usher in a new golden age for America, that means ultimately share markets will rise, and he indeed will want them to rise. But by the same token, there's going to be a lot of noise along the way. And we saw that this week on that first day, the day of his inauguration. He sort of initially didn't make a lot of mention of tariffs, and then later on in the day and the next day, when asked about them, implied that the tariffs on China, Canada and Mexico were still on the table, and he might do them by February the 1st. So there's going to be a lot of volatility. I guess you also have to get used to a lot of funny stuff along the way. and we saw that in relation to Gulf of Mexico being renamed and so on. It's just worth having a look at that chart there, which I noticed you just flashed up. You can see a massive rise, massive number of executive orders in the first day. I think Trump now has the record for the number of executive orders on day one. And if he keeps going at this pace, he's going to have the record in terms of the average number per year. So he's obviously putting a lot through the executive order process. Of course, a lot of the things that he has done don't necessarily become executive orders. And some things have to go through Congress, such as the tax cuts and so on. So we're still waiting for details around all of that. But we do have to allow, this is going to be a noisy ride. There's going to be a lot of messy stuff along the way. The stuff around the meme coin, I must admit, I found a little bit disconcerting because you could argue it's a president making financial gain on the back of his presidency to get meme coin or crypto followers to jump in. And that seemed a little bit inappropriate to me. But by the same token, you know, seems to be a lot of enthusiasm over there in the US. Time will tell whether this actually works or whether the negatives, populist negatives, sort of dominate. And hopefully, the bulk of the focus is on the positive. You know, things like tax cuts, deregulation, which might enhance productivity in the US over the longer term.
What does it potentially mean for Australia and how Australian businesses might need to adapt, particularly if some companies go overseas and conduct their business in the US?
I think for Australia, it has a lot of implications. It's funny, I've just got a new iPad and I'm just wondering where the camera is. But in any case, hopefully I'm looking the right way. But in any case, I have a feeling I'm looking the wrong way and they've moved the camera relative to where it was on the old iPad. But I think it has huge implications for Australia. You know, it seems to me that the Trump administration just provides further confirmation there's a backlash against centre-left progressive policies, you know, whether it's wokeism, high immigration levels, big levels of government spending, more regulation, all those sorts of things. This is a bit of a backlash against that for good or bad. That's the reality of things, and we have to allow for that. But that has big implications for Australia because if Trump is going to proceed with big tax cuts, particularly for corporates that locate in the US, it's going to be quite conceivable that Australian companies might think, well, we're going to relocate to the US where there's less regulation and less in the way of maybe the camera's up the top there. I think it is. So I'll look straight ahead. It's a bit of a change compared to the old iPad. I was wondering what the difference was compared to the old iPad.
It's the
apart
camera.
from the fact that I had to go and buy a brand new keyboard for it, even though it's exactly the same size iPad as the old one. And that cost me a small fortune. I traipsed from one retailer to another. Maybe I should have bought it online, but that gets me even more nervous when you're buying those things online because each one is slightly different than the other one.
Well,
anyway.
Yeah, I was going to say, I can give a bit of a plug to Apple as well. I bought a watch yesterday, but I tried to trade in my old one and they said that one was not compatible for the trade-in. So, you know, they get you when they get you, don't they?
Yeah, they do. You've got to upgrade everything you had. I have to go and upgrade, whether it's the chargers or the keypad. And the keypad costs a small fortune alone these days, even though it's very nice. Even the keys light up on it. So if you're typing in the dark, you've got the keys light up, which is improvement from the old one. Anyway, it's good news that I've now discovered where the camera is. It's not off to the left, it's up the top there. Which is a
back to the economy.
Because it almost looks as if I can look at you straight ahead as well as look at the camera. So that's good news. But in any case, I think the big implication for Australia is that it does put pressure on us to wind back some of the regulation. There's been a lot of regulation creeping into our economy. Wind back some of that. If the US is going to be doing the same thing, Australian businesses will start to complain that they can't compete against US companies facing less regulation. Corporate tax rate, I think, is still a big issue. We're up there at, 30 cents in the dollar. America's already loaded at 21 cents in the dollar and looks like they'll cut it further. And so that, I think, is a big issue for Australia. There's also issues around government spending. If America cuts that back and we don't, then it will leave our productivity lagging the US. And you can already make an argument the big rise in government spending in Australia, it has been a factor pressing our productivity growth in recent times, which directly affects living standards in Australia. So it does have implications for Australia, whether you like Donald Trump or not. I still have reservations about whether he's appropriate to be a president, given his personal behaviours. Although I like his dance, I must admit. But apart from that, the way he's treated people over the years, including women, I think is not the sort of thing you want to see in a president. But by the same token, we as market analysts have to focus on what it means for markets. And what it means for investors, and in that front, it's not all negative. There are some positives in there from what Donald Trump is ushering in.
Maybe you and Deanna and me can do that dance in one of your videos. Get the AMP take on the Trump dance. Let's talk about the Aussie.
We had a bit of a go this week. We had a bit of a go in the last week.
Oh, did you? Sorry, I missed that one. What about the Aussie? Because of course it's really stuck as well with what could happen with tariffs and with China, and the differential between the Fed and when we're going to see the RBA cut.
Yeah, that's an interesting one. As of last week, I think we got to a low of 61.5. Lots of economists were saying this is going to be a barrier for the RBA cutting. Maybe they'll have to wait till next year or something. We thought that was a bit over the top for several reasons. One is the Aussie had mainly fallen against the US dollar. It hadn't fallen so much against other currencies. On a trade-weighted basis, it's still in the same range it's been in for the last 4 years. And most importantly, on a trade-weighted basis, that's on an average basis, only down about 5%. It's not the sort of thing that's going to cause a huge boost to inflation. Since then, we have seen the Aussie dollar bounce. And just looking at it a moment ago, I think it was now back above 63 cents. It obviously saw some gyrations this week, given all the noise around tariffs. So there is that issue going on. But it has had a bit of a bounce, and that may make the RBA feel a little bit more relaxed. But obviously, a lot will depend on what Donald Trump does on tariffs, and that issue is still out there. So it could still see some more weakness from here. But again, I don't think it's the sort of thing that could stop the RBA cutting if the trim mean inflation rate, when it comes out on Wednesday next week, is benign. And I think it will be reasonably good. I think we'll see a trim mean around 0.5, which means 3.2% annualized on an annual basis. 0.5 will be about 0.2% below the RBA's expectations. They'll then have to revise down their forecasts, and that could well indeed clear the way for a rate cut in February.
All right. What is so that's looking ahead to CPI. What does some of the PMI data tell us about how Australian businesses are faring?
Well, it's still fairly tough out there. The PMI, I think, rose slightly from 50.2 to 50.3. That's the thick black line in that chart there. And there was good improvement for manufacturers, although it's still negative, but some deterioration for services companies. But the net impact, if you look at that chart there, wasn't much change. And around 50 is sort of subdued economic conditions. Employment is still negative when you look at the details there. What I guess was a little bit disappointing, and this is for January, so it doesn't pertain to December quarter inflation numbers necessarily, was that there was an uptick in the mustard-coloured line, the yellow line for input prices, and the output price line, the green line. I don't think they're enough to alter the trend, which is still down, but obviously there's still residual cost concerns out there amongst Australian businesses. So if that continues, then it's a concern for the Reserve Bank, and it's going to be hard to see lots of rate cuts this year. I think the more likely scenario is, given subdued economic conditions, that it'll probably resume its downswing.
All right, Shane, always a pleasure. I look forward to finding that dance online. Shane Oliver there from AMP. Well, the stock of the day was Kogan.com. Philip Pepe from Shaw and Partners and June Bailu from Tribeca Investment Partners joined Andrew on the call.
Share trading is the matter of an ASIC investigation. So as a small cap investor, you want to know that management have the interests of all shareholders at heart, not just their own. And this one doesn't pass the pub test for my liking. So avoid Kogan at any price, in my humble opinion.
Headline looks good, revenue's great and everything else, but then you look at the cost, so the margin missed, it costs more expensive to keep a customer, and also, and then they're not loyal. They will move on to something else, should they're required to buy things. So I just think the environment's very completely changed.
So
Let's have a look at the market leaders on a positive session, kicking it off with Premier Investments, snapping that 4-session losing streak as investors buy in after shareholders of both Premier and Myer approved Myer's merger with its brand apparels business. Monadelphous also had an update. Shareholders like that. Shares up 6%, AMP rising 5.3%. Star Entertainment getting some love after, of course, being battered of late, and Tabcorp up by 4%. To the downside, a lot of the gold players and resource players, Regis Resources, down 6.2%, and Steadfast was off 3.4%. In the small end of town, Synlait Milk also had an update today, sending shares up by some 27%. And looking at the laggards in the small space, we've got Energy Transition down 16.25%. Webjet also under pressure, down by 8.1% to 74 cents. Looking ahead to what we're getting tonight in the US, global PMIs. We just touched on what some of our PMIs show about Australia. Also existing home sales for the US and some big earnings, including Amex and Verizon. Next week, of course, we've got Australia Day holiday on Monday, so markets are closed. We won't be here. Don't miss us too much. We'll be back on Tuesday. Also PMI for China, and then the big one with the Fed holding its rate decision on Wednesday. We've also got GDP for the December quarter and PPIs for the December quarter. But don't forget, of course, on Wednesday we get the CPI, the very important consumer price index as well, which is the last piece of the puzzle ahead of the RBA's interest rate decision coming through in February. Well, our first investor event for 2025 is happening this month, January 30th. Time to get it in your diary. High Conviction is a selection of the best ideas for this year across public and private markets. We'll have some of the country's top investors with their high conviction concepts, whether they be themes, strategies or individual stocks. Registration is free. You can get all the details at ausbiz.co/conviction. Final check of where the market is, 0.5% higher on the CBO 200. I'll just get you an update as well on where the ASX 200 has finished the session, as my computer has a little quick think about that. It's up 30 points or 0.4% to 8,408 points. And over the course of the week, the index was up 1.2%, currently just off 1.25% from its all-time highs. So that does it in a very eventful week for markets. We've got another 4 years of this as well. We'll see you again on Tuesday. Enjoy your Australia Day weekend.